Some say that Spain is a country with excessive and high taxes. Others say that they find that tax in Spain is reasonable and makes sense. So with different conflicting views out there, you might be asking yourself, how much tax will I pay in Spain? And today, I'm gonna answer your question. Let's get right into it. If you're new here, my name is Jonny. I'm originally from the UK, but I've been living and working in Spain for the past 4.5 years, and I've been through several tax declarations here, asked lots of questions to lots of different tax advisors. So one might say I have a pretty good understanding of how tax works in Spain. That said though, I'm not a tax advisor, and this video shouldn't be taken as tax advice. And when you need personalized advice specific for your situation, you should always consult with a tax professional. Now that's out the way, let's get right into it. So let's start by talking about who pays tax in Spain. So someone who is a tax resident in Spain, that means they reside for 183 days in the tax year, which is also the same as the calendar year in the case of Spain, will pay tax on their worldwide income when residing in Spain. Someone who is not a Spanish tax resident, that's someone who resides less than 183 days in Spanish territory, again over the course of the year, will only pay tax on their Spanish sourced income. So for example, someone who lives and works in the UK but maybe has a property in Spain that they rent out, they'll pay Spanish tax on the income from that rental property because it's income generated in Spain and would therefore be considered Spanish sourced income. So in terms of income tax, that's who pays tax. Now let's talk about the different ways in which you pay income tax in Spain. Basically, there are two classifications, let's call them, of what type of tax you pay. Now, one of these is called the base imponible general in Spanish, which would be the general tax base, and the other is called the base imponible del ahorro, which is the savings tax base, basically. So what is the difference between the two of these? We'll start with the general tax base. Now, in simple terms, the general tax base covers income generated from economic activities. So that might be employment through a company, it might be self-employed income, it also covers property income as well. And any other miscellaneous income you may have as well will probably also go under the general tax base. So these are the kind of things that you need to consider when looking at your general tax base in Spain. Now, in the practical sense of how to pay tax on your income, if you're working for an employer, then typically speaking, your employer, based on your annual income, will calculate a withholding percentage and automatically withhold tax on each payslip throughout the year. And then when you come to do the tax declaration the following year, the withholdings throughout the year will be included on there. And then based on the final input that you give into that tax declaration, the difference between what you really owe and what's been withheld will be calculated. And then the tax agency will determine whether you owe or are owed money. In the case of self-employed people, or autónomos as they're called in Spain, it's a little bit different. So as an autónomo, every quarter you declare your income that you've made up to that point throughout the year. And one of the forms that you fill out is tax form 130, known as the Modelo 130 in Spanish. What you fill in this tax form, basically the tax agency will use to determine how much tax you owe based on the income you've earned up to that point in the year, and they will debit that amount from your bank account. And similar to the case of an employee, once you get to the end of the year and once you come to do your tax declaration for the year, based on what the tax agency has debited from your account, they will look at what the real situation is versus what's debited and determine if you owe money or if you are owed money. The big question you're of course all wondering is, how much tax will I pay on what I earn? And the answer is that not only does it depend on how much you earn, of course, but also in which region of Spain you live. For those of you who aren't familiar with Spain's devolved politics, basically Spain has a central government. Think of this as similar to the federal government in the United States. And then they also have 17 regional governments of each autonomous community. So think of this like a state government, basically. And the regional governments within each autonomous community have some kind of authority, some kind of autonomy in determining the tax brackets and the tax percentages in those regions. Regardless of where you live, you'll pay central government taxes, which if you look at the table on the screen, range from 9.5% of your income up to 24.5%. Note that this is a progressive scale, so if you earn above 300,000 euros, for example, you don't pay 24.5% to the central government on all of that, you only pay it on the portion that you earn above 300,000 euros. And at the same time, you'll also pay a percentage depending on the autonomous community that you live in. As I say, the brackets vary depending on which autonomous community you're living in and also the percentages. So to give you an idea of how this differs, some autonomous communities such as Madrid, such as Murcia, such as Galicia have really low autonomic rates at the bottom end, around the 8.59%, which would give an aggregated rate of about 18 to 19% at the low end. And they also have much lower maximum autonomous rates as well. In the case of Madrid, it's about 20.5%, Galicia 22%, Murcia 22%. So in these autonomous communities, the maximum aggregate tax rate that you could typically expect to pay is around 45 to 47%. On the other hand, you've got autonomous communities like Valencia and Catalonia that have very high minimum rates and very high maximum rates as well. So they have minimum autonomous rates of 10.5 and 11.5% respectively, giving you a bottom aggregate rate of around 22%. And in the top end in Catalonia, you've got 25.5% as the maximum autonomous rate, given a maximum aggregate percentage of 50%. And in the case of Valencia, you have a maximum autonomous rate of 29.5%, meaning the top aggregate tax percentage you could pay in that autonomous community is 54.5%. So you can see how it varies between region of the country, and this also causes division on a political level and debate as well, with some autonomous communities claiming that others gain an unfair advantage by having more favorable tax rates. But we're not here to go into the political aspect of that debate today. One other thing to note as well is that the autonomous communities of Navarra and the Basque Country have their own tax regimes. That means it's separate from the central government tax regime, and so residents in those autonomous communities, their taxes are handled entirely by the autonomous community government. Now let's talk about how other types of income is taxed, and it's typically under the savings tax base, the other tax base that I mentioned earlier on in the video. And so what this basically covers is saving, investing, interest income. So if you receive dividends from shares, if you sell a house or a stock and you make capital gains, if you earn interest from money that's sitting in a bank deposit, then all of that is taxed a little bit differently to the general tax base. It's much more straightforward how it works as well. Basically, when you look over the course of that tax year, when you look at all of the interest earned, dividends received, capital gains or losses, etc., what you'll basically come up with is a net result of all of that, and that's what will be taxed. And again, it's a progressive scale starting at 19% up to 27%, depending on how big your net result is, taking into account all gains and losses. And worth mentioning here as well, when you see this on the tax declaration, basically those rates don't change regardless of which autonomous community you live in, but you'll see that the tax owed on that basically is split 50-50 between the central government and the autonomous community that you live in. So these are the rates you'll pay, but basically half of that rate is made up again by the autonomous community and half by the central government. Now I'm going to touch very briefly on social security, because although it's not an official tax, it is nevertheless something that you'll see on your pay slip or something that you'll pay if you're self-employed, and it does deduct from, any earned income that you have. So just to give you an idea of how much social security you can expect to pay, let's take a look at that real quick. As an employee, you'll typically pay around 6.7% of whatever you earn in the tax year as social security, up to a maximum of 3,650 euros, thereabouts. Because if you're employed, your employer is also making social security contributions at the same time, and your employer is typically making greater contributions as well than you are when it comes to looking at total social security contributions. If you're self-employed, it's a little bit different. You'll typically pay more than an employee would, and it will also be based on your income as well. I talked about this in a past video where basically the more you earn, the more you pay, but the lower the percentage of your income that social security percentage makes up. And it's capped up to a certain point as well. I'll put the scales on the screen so you can have a look and see how it is. If you are a new Autónomo in Spain though, there is a way to pay less. Basically, if you're signing up as an Autónomo, self-employed, you haven't been on the Autónomo register in the past 2 years or 3 years if you've already benefited from the old Tarifa Plana, which is the reduced rate, then you can pay a flat rate of 80 euros per month during the first 12 months. And if after those 12 months your income as a self-employed person doesn't exceed the interprofessional minimum salary, then that can be extended for another 12 months basically before you go onto the income-based system. Important as well that if you are applying for that reduced rate, that you don't have any debt or owe any money to either the social security or to the tax authorities in Spain. These social security contributions as well are also tax deductible, so if you're an employee, you'll see that your taxable base salary is reduced by those contributions, and if you are a self-employed person, then they are 100% deductible business expenses, again to lower your net income. Now that I've given you a basic overview of how tax works in Spain, I'm going to give you a couple of ways of how you can lower your tax burden in Spain ever so slightly, not massively, but every little helps, I believe. So here's a few ways that you can do that. The first two, if you're an employee, are automatic, and it's basically the personal minimum deduction and deductible work expenses. So every taxpayer in Spain basically has what's known as a personal minimum, which is an amount that you don't pay tax on, and it's calculated based on a set number based on your age. So if you're over 65 or over 75, then that personal minimum increases and you pay less tax on that first bracket as a result of that. As an employee, you automatically get the right as well to deduct 2,000 euros of work-related expenses in your tax declaration without need to justify them as well. If you're a self-employed person, then you also get business expenses, of course, but there's generally more justification, more receipts, and more stringent rules as to what is and what isn't allowed. But as long as you can justify that that is a legitimate business expense that is needed for you to generate income from your economic activity, then generally speaking, that will pass as a deductible business expense. The next way is via pension plan contribution. So if you're working in Spain, employed or self-employed, and you're tax resident, you can contribute up to 1,500 euros per year into a Spanish pension plan, and basically whatever contributions you make are tax deferred. So if I contribute that full amount for the year, let's say, then whatever I've earned, my taxable base is reduced by 1,500 euros, and I'll only pay tax on the lower amount because what I've contributed to my pension plan is tax exempt until the point when it's time for me to withdraw from that pension plan, on which I'll be taxed on the work income and also the capital gains. So a tax deduction in the short term, but there will be tax later on when you come to withdraw that money. If you work for an employer as well, ask if they have an employee pension plan, because normally by contributing through that, you'll get an employer match, and that's essentially free money that they're giving you, again, to your pension plan, and those also count towards lowering your tax base. So in terms of what you can do, you can only go up to 1,500 euros, but your employer's contributions also count beyond that to lower your tax base further. And the further up the tax brackets you are, the bigger the tax saving as well, because it will be coming from those higher tax brackets where you're taxed greater percentages than in the lower brackets. If you're a high income earner moving from abroad to the first time in Spain, then you may want to look into the Beckham law, which allows you to pay a 24% flat income tax rate for the first 6 years of you residing in Spain. So the number of people who can meet this criteria, people in international companies, managers, directors, athletes, of course, it was named after David Beckham, so it makes sense. So if your income is towards the higher end on the tax scale and you're moving to Spain for the first time, then it's definitely worth looking into the Beckham law with a tax advisor to see if it could be beneficial to you. And then there are other deductions as well given for, people who have legal disabilities. And then there are other deductions as well based on, your family situation. If you're a large family, if you're filing a joint tax declaration with a spouse or a partner, for example, and if you have a recognized disability as well, that can also give you the right to apply a certain level of deduction to your income. So what I'm going to show you now, guys, is 3 practical examples of how much tax someone in a certain situation would pay depending on where they live in Spain and depending on how much money they make, if they're self-employed or employed, etc. So let's take a look at the screen right now. So let's take the example of a self-employed person who is making 40,000 euros per year with 10,000 euros of business expenses, and they're living in Madrid. So let's fill in the table here. I'm going to put in 40,000 as their income. They have 10,000 euros of deductible expenses. We'll assume they're below 55. We'll not say that they contribute to their pension plan. Now let's say they are self-employed. They're not a new Autónomo. So this person living in Madrid who earns 40,000 euros per year would have a net income of around 31,000 euros, and it would pay around 4,400 euros in tax, which is a net effective rate of around 11%. You can see as well their social security contributions total 4,500 euros. If this person was a new Autónomo, we'll select yes, then this person would only pay 960 euros in social security. And you see that, of course, that person will earn more money. They'll have a higher net income by paying the lower rate, but it will also pay a higher rate of tax as well, because that will push them into a higher tax bracket. Now let's take the example of an employee who earns 50,000 euros per year, contributes the full 1,500 euros to their pension plan, and let's say their employer also has a match of 10 euros per month, and they gain 500 euros in dividends per year. So we'll put 50,000 euros here. This person is an employee. They are not a new, this is not relevant anymore. So they have 2,000 euros by default of deductible work expenses. They have 1,500 euros of pension plan income, but we said that their employer also contributes a little bit as well. So we have 10 times 12. So they get a reduction of 1,620 on their tax base, and they also have dividend income of 500 euros. So assuming this person lives in Madrid, their total deductions would be 3,620 thanks to the pension plan contributions. This person's net income would be 36,700 euros approximately per year, or 10,000 euros in tax annually, hitting the 20% aggregate tax rate. And on their dividend income that we talked about, they'll pay 95 euros in tax in total there. So you can see they'll end up with 405 euros after tax on the dividends. Now, to illustrate the point I was talking about earlier about how autonomous community can really change your tax result. Let's take this employee's same situation and change the autonomous community to Catalonia. So you can see now the employee only earns 35,800 euros per year, and they're now paying an effective tax rate of 22% compared to Madrid's 20%. So you can see that by simply living in Madrid, this person is saving almost 800-900 euros in tax. And you can see the difference here by playing with this pension plan contribution. So if I remove that, the net income actually goes down because essentially you've kept that 1,620 euros, and so you have to pay tax on it. But if you essentially renounce or delay that 1,620 euros, then you're getting a tax refund essentially on those contributions because they're not tracked throughout the course of the year when your employer is withholding income tax. And let's take a look at one final situation. Let's take the case of someone who's coming to Spain on a non-lucrative visa. Let's say they have half their income coming from a property business and half of it coming from a state pension. And let's say they also sold their house and they made a 10,000 euro profit. So go to the template and fill this in. So I'll put in their pension income. So we say 15,000 and we say property income as well. And then they made a 10,000 euro gain on their property as well. So as this couple is retired, they won't pay social security because it's not coming from work income. What they will pay is essentially 7,000 euros on a net income of 24,800 of the 30k total income. And then on the 10,000 euro capital gains, they'll pay around 1,980 euros in tax and be left with 8,000 euros of those gains. That's assuming that they're a Spanish tax resident at the time of selling the property. And we're going to assume as well that they're coming from outside of the EU and they're not able to offset those capital gains as well because they sold the property in another EU country, for example. So now if we set the region to Andalusia, you can see 24,500, 7,400 in tax. So there's just 3 examples, guys, based on different situations of what someone might pay in tax. If you've watched this and you're wondering how much that you would pay, then I've got good news for you, and that's that you can download this Excel file for yourself and put in your numbers to see how much tax you would pay in Spain. If you head over to my website, you can find this file on sale. As I've shown you in the video, it contains a lot of features such as social security based on whether you're an Autónomo or an employee, if you're a new Autónomo, if you're someone who benefits from the Beckham law, if you're someone who makes income from overseas, you can use the exchange calculator to determine what your euro income is. You can apply the applicable deductions to lower your tax rate, and you can also select your autonomous community to see how living in one part of the country or another might affect you as well. And I've reviewed this tax calculator with a tax professional. You had to look through the file with me to make sure that the calculation is working exactly as it should. And I've tried and tested a range of scenarios in this calculator versus the most popular Spanish calculators that are only available in Spanish, and it produces a very, very similar outcome. So there is a high degree of confidence in the accuracy of the calculation. Again, do keep in mind though that the calculator is only for information, educational purposes only. It shouldn't be taken as concrete tax advice and a definitive calculation. But if you're thinking about moving to Spain, you want an idea of how much tax you might pay, but you're not quite ready to pay big amounts of money to a tax professional at this stage, what I've aimed to do with this file is make it an affordable and accessible first step so that if you do want to have a look, you do want to make that first assessment, you can get an idea of what you might expect to pay without putting down loads of money. And you can then even use that calculator to talk with a tax professional and get more personalized and tailored advice. So the calculator is available on my website for sale. If you've signed up to the channel membership, then you can access this file for free, downloading it through the channel members store. And by becoming a member, not only do you get access to this file, you also get access to other exclusive benefits such as a monthly live stream with me. And also when I have guests coming up on my podcast, you'll find out who the guests are in advance of the episodes coming out. And if you want to ask them a question and get it answered, then I'll pass on your questions to the guest and we'll answer it for you in an exclusive video for members only. I've also made a more simplified version of this calculator as well, which is available for free download for Millennials with Money newsletter subscribers. So by signing up to my newsletter from the website, you'll receive a special code via email that you can apply at checkout when you add the basic calculator to the shopping cart. The basic calculator will still give you a reasonable rough estimate, but it doesn't take into account some of the more advanced features such as autonomous community, such as the graphs you could see in the first one, such as being able to apply deductions and convert different currencies to euros, as you can do in the advanced calculator. Anyways, I hope you found this video helpful, guys, and I hope this cleared up the topic of Spanish tax for you a little bit. Leave a comment and let me know about your experience with tax in Spain, and also if you download the file, I'd love to hear about your experience with it as well. So next time, I'll see you on the next one, and let's get this money.